In this video, I'm going to show you a few interesting things about price action and the Andrews Pitchfork. Price action trading aligned with the Pitchfork is known to be one of the best combinations for achieving the maximum level of precision using price charts. That's because the core of price action reading is grounded on a simple market logic, and the Pitchfork is grounded on some basic and yet powerful mathematical and physical principles. In this chart, we have the pound dollar in the daily time frame, but keep in mind that these techniques work in any market and in any time frame. Right from the start, we have an interesting situation because the major flow of the market is going up, while the minor flow is starting to go down. The major flow, which is composed by the price vectors with larger magnitudes, is producing higher highs and higher lows, while the minor flow, which is composed by the price vectors with smaller magnitudes, is producing failures to advance price to the upside, and has already begun producing lower highs and lower lows. One thing that you will notice is that the minor flow is quicker than the major flow, so it changes direction first. That makes sense because the smaller flow is more agile, just like a boat is more agile than a ship. This is incredibly useful sometimes because the minor flow can show what's going to happen before the major flow does. That's what seems to be happening in this market. The key here is observing that right after the major flow made a new high, therefore confirming the power of buyers, the minor flow displayed a failure to create a new high. That situation denotes the end of the upward movement. A further confirmation is that the minor flow not only displayed a failure to the upside, but it also created a lower low right after. Notice that in moments where trends change direction, there is a series of events that make logical sense and that allow the trader to watch the trend change direction in real time. This price action analysis based on a simple market logic is enough to create a qualitative judgment about the direction or bias of this market, which is to the downside. We can infer that based on the notion that the minor flow will point to the main direction of the market before the major flow does most of the time. The major and the minor flows will often collide with each other in the sense that one will tell that the market is going up and the other will tell that the market is going down. In the methodology jargon that we use, this is called the counterpoint between flows. This is useful to know because several opportunities can arise depending how much headroom exists between the flows. Given the qualitative judgment about the direction of the market, we need tools to determine where price is going to reverse and how much is going to travel to the downside. This is where the Andrews Pitchfork will help. Given the main highs and lows of this chart that are part of the context we already considered, we can draw a simple standard pitchfork that will point to the downside. That's the first clue about the agreement between the line work and the qualitative analysis we have done so far. Observe that the pitchfork creates upper and lower boundaries for price to travel given the recent price information. Let's advance price a little bit to see how price interacts with the pitchfork. Here we can see that price travels to the upper line of the Andrews Pitchfork, and right after touching the upper line, price creates an inside bar in order to signal that buyers have stopped advancing the market to the upside. Notice that this moment represents the possibility of a trade opportunity to the downside because we have the overlap of several key elements in one single place. We have the qualitative judgment about the change in direction of the trend to the downside given the fact that the minor flow began changing before the major flow. Now we have price apparently respecting the barrier outlined by the upper line of the pitchfork. We are also near a place where you can put a stop loss order that is grounded on a market logic instead of an arbitrary decision, which is the highest high in the chart. The reason we can use that as a stop is because that's a confirmed high in the minor flow that initiated the short trade idea in the first place. If the qualitative judgment about the market direction is correct, in alignment with the precision of the pitchfork, there is more than enough headroom for price to yield at least a 1-to-3 risk-reward ratio. So let's see what the market does next. Here we can see how price traveled far to the downside, rendering the short trade idea as successful. Notice how precise the Andrews pitchfork can be. Price bounced from its upper limit and traveled to its lower limit, reversing exactly at both lines. This serves to show that price indeed has a short-term memory that can be exploited if it is understood properly. A short trade from the upper line until the lower line would yield a 1-to-4 risk-reward ratio, which falls within the optimal range of risk-reward ratios that are not too low nor too high. So that's it for this video. If you have interest in learning more about this type of market analysis and trading technique, please visit my website fractalflowpro.com. There you will find a series of courses that explore these techniques in greater detail. You can also find a lot of information about the courses and a lot of YouTube verified testimonials from students who already learned the techniques and are applying them every day. You can also easily contact me using the website contact form or directly in the email address available in the video description. If you like the content I produce, please help support the channel by clicking the like button, subscribing to the channel, activating the notifications button, sharing the video with your trading community, and leaving your feedback below in the comment section. Don't forget also to check my other videos talking about price action, the pitchfork, and much more. Thank you very much for watching and take care.